Welcome once again to When the Facts Change, economics and politics in a fast-moving world, with me, Liam Halligan. Now this week, UK Chancellor Rachel Reeves delivered her spring statement. Apart from steady as she goes platitudes and left-wing clap lines, she had little to say. But what was astonishing is that Reeves seemed to largely ignore the economic and financial impact of turmoil in the Middle East. This US-Iran conflict isn't a flash in the pan. With Israel involved and other Gulf powers being drawn in, we're in for military chaos and thwarted energy supplies for weeks, possibly months to come. That will seriously impact Britain, a hugely vulnerable net energy importer. On Tuesday, Reeves said the OBR budget watchdog had cut the UK's 2026 growth forecast from 1.4 to 1.1%. But that downgrade doesn't include the impact of the 15% spike in global oil prices since US airstrikes last weekend, and the doubling of the price of UK wholesale gas. Reeves continues to claim laughably that the UK is a beacon of stability. In reality, rising energy costs will push up inflation, with creditors then demanding higher returns to lend to a severely cash-strapped British government. Already, the UK government's spending upward of £100 billion a year on debt interest, more than we spend on schools, double the defence budget, with Britain paying more to borrow than any G7 nation, more than Morocco and Greece. But with energy and global supply chains under threat, the coming inflation spike's pushing up UK borrowing costs even more. Since Monday, the rate at which government borrows long-term money has already surged 25 basis points, with yet more borrowing needed to pay those higher interest bills. And as long as Iran continues to block the Strait of Hormuz, that vital energy pinch point, thwarting Saudi oil and Qatari LNG gas from global markets, energy prices will keep rising. To discuss all this, I invited Shadow Chancellor Mel Stride to the When the Facts Change studio. So stand by for a no-holds-barred discussion with one of the UK's top Conservative politicians on When the Facts Change. Mel Stride, thanks so much for appearing here on When the Facts Change. We're talking just after Rachel Reeves' spring statement, such as it was. What did you think?
Well, it's a complete denial of what's going on at a time when we've got stuff kicking off in the Middle East. We've got energy prices spiking as a consequence. We've got the possibility of a major external shock to our economy. There she is coming to the House of Commons saying it's all going incredibly well. We're all going to be a lot better off and I'm doing a great job. And the reality is she isn't. She's created a very fragile economy in a number of ways. Very high debt servicing costs, unemployment going up, inflation still high and sticky, and so on and so forth. And she should be coming forward with a concrete plan as to how she's going to get growth moving.
Would you acknowledge that at least part of the UK's problem is the state that the Tories left the economy in with respect? After 14 years of Conservative rule, the tax burden was very high. The national debt was high, over 90% of GDP, and there was quite sluggish growth. It's not all Labour's fault, is it?
I think it's really important, actually, to look at external shocks, because there were two major ones when we were in office. One was the Ukraine-Russia war and the energy spike that came as a consequence of that. Very high inflation at the back end of 2022. It actually went over 11%, and we had to bring that down. And the other thing, of course, was COVID, which shrank the UK economy by over 10% overnight. And what we did was to step in to preserve jobs and protect the labour market in particular. It came at a very large cost, about £400 billion. Now, we were able to do that because we had a pretty strong economy across that period of Conservative office. What you've now got at the moment is almost the other way around. You've got a very weak economy because of the choices that the Chancellor's taken, and yet you've got this looming economic shock that we're not going to be in a position to be able to protect ourselves from in the same way. So what she's got to do urgently now is explain how she's going to get growth rates up, because if you can do that, we can have the fiscal headroom and manoeuvrability to withstand the kind of shocks that may be coming our way. But we heard none of that yesterday in the Commons.
This is a new Conservative Party. You've got a new leader under Kemi Bade, not relatively new, since the autumn of 2024. Do you think the Conservative Party needs to distance itself, Mel, from some of the things that you did do in office. Do you think that the British public, the electorate, would give the Conservatives credit for acknowledging what went wrong, as long as you've got a plan to put things right?
Yeah, I think we have to have a balanced approach to that. So I think there were things that we did that were mistakes. I, at the time of the so-called mini budget, for example, called that out at the time when it happened and subsequently afterwards. And we made it very clear that right at the heart of the Conservative approach to the economy is fiscal responsibility. And I spoke about that at our conference, where I set out savings and some tax cuts, but also a golden rule that means that half of everything we save in terms of public spending should go to bring down the deficit. But I think we should also acknowledge there were some things that we did really well. So we were a job-making machine as a government from 2010 on. 4 million new jobs across that period. We had the welfare reforms around universal credit, making sure that work always paid. We have Michael Gove's education reforms, which saw us shooting up those international league tables in terms of educational performance in a way that we'd languished in the past. So of course it's a mixed picture, and of course there are lessons to be learnt, and I think we do talk about some of those things. But look, we're under new leadership now, new ideas, deep thinking, a very clear, very conservative approach to the economy and to society. And I think that under Kemi's leadership, she's communicating that extremely clearly as part of a united team. And my part of it is to communicate the economic element of that.
So Kemi Badenoch came into the Commons in 2017. She was a very junior MP when Theresa May put the UK's climate change targets into law, the first major economy to do that. She called that out as a junior MP, and she's since reined back on those promises, saying that the 2050 goals are, quotes, impossible. When she did that, I think she genuinely moved the political needle. I think she genuinely influenced the debate, even though the Conservatives, with respect, have got very few MPs by historic standards, and a lot of the media didn't want to hear from the Conservatives. Do you think it's time now to say, I put it to you, Mel, not you personally, but to your party, do you think it's time to say that putting such high taxation on the North Sea oil and gas was wrong? Do you think it's time to properly reverse that and admit that that really did undermine the UK's energy security?
So we've been very clear on North Sea oil and gas, and I've actually been up to Aberdeen. I've met with various of the companies up there, and I know what it means when you have an energy profits levy at the level that it is, and you start to restrict extraction.
78% on energy companies' surpluses, so they can't reinvest. Nothing's viable.
Utter madness. And I'll tell you why. Firstly, economically, you've got a couple of 100,000 jobs hanging in the balance as a consequence of what's happened. Secondly, you're actually extracting oil and gas from the same part of the seabed that the Norwegians are and are capitalising on it.
Yeah.
Thirdly, there's a huge economic value in actually having that oil and that gas.
You get the tax revenue, you get the jobs.
You do, yeah, absolutely. So you get the economic benefit. Fourthly, you have the security, never more important than now, given what's happening in the Middle East at the moment, the security of having oil and gas rather than having to import it. And the fifth point I would make is actually the environmental point. The alternative to gas extraction in the North Sea is typically liquid natural gas coming into Milford Haven from around the world. And that comes in with 4 times the carbon footprint of actually extracting it from the North Sea. So absolutely. And we've been very clear on the wrong direction the government has taken in that respect, and that is something that a future Conservative government would definitely be doing something about.
I agree totally on the emissions point. To liquefy natural gas, stick it in a freight ship, 3,000 miles across the Atlantic, or from the States, or from Qatar,
or America,
to regasify it. Diesel-powered ships. It's completely mad, and yet for a long time, your party, again, not you personally, but your party, they preferred to virtue signal and worship at the altar of Greta Thunberg, the young woman who Rod Liddell famously called the Doom Goblin, rather than doing what was actually right. And meanwhile, the UK's oil and gas complex, the North Sea, employed 400,000 people. Now it employs less than 100,000. Quite a lot of that happened on the Conservatives' watch, if we're honest. Isn't it time to really call that out?
So look, I think I've said what I've said, which is we've got a very clear direction on oil and gas and the North Sea in particular. And I think it's right that we now make that case. At the heart of this is the fact that we are under new leadership. So what we have to do is certainly recognise things we did in the past that may not have been entirely right, recognise some things that we did that were definitely right, but at the same time we've got to be looking to the future and explaining to people how we are going to now create an economy which is far more productive and growing at a much faster rate than we've seen, particularly since 2008 and the global financial crisis. Now, there are many strands that feed into that. Part of it is getting on top of the size of government so that you can get taxes down, particularly on the productive parts of the economy, so businesses, job creation, the labour market and so on, but many other things as well. Skills, higher education, supply side issues like building roads and rails and reservoirs and houses and energy costs as well. And how do you create a more dynamic entrepreneurial society, which we had a little bit more of in the 1980s when I set up my own business. So my background, this is one of the strengths of the Conservative Party. And I say a strength over and above, the Labour Party and other parties, is that you've got people like me in there who literally sat at the kitchen table, came up with ideas, got groups of people together, built companies from scratch, in my case, both here and in the United States. And that is why we understand and we appreciate what you need to do to rewire an economy in a way that it can grow and work. And that's the mission that we're all about.
How much trouble do you think the British economy is in? How much trouble do you think our debt market is in? Obviously, you have big insurance companies, pension funds, sovereign wealth funds around the world who lend governments serious money. You know about that to your fingertips. You're a very economically literate, business literate guy. So I would say from experience is your colleague Andrew Griffith. You as shadow chancellor, him as shadow business secretary. You do have a kind of business facing part of your front bench there, people that do understand business. So you understand the dangers when I say that 25 to 30% of the UK's sovereign debt is index linked. That's unique across the Western world. Italy is the next highest. It's like 12, 13%. A lot of the G7 countries is below 10%. When you have high index linked sovereign debt, as inflation goes up, you have to pay people more when they hold your bonds. That means you've got to borrow more to pay them more. That's a Ponzi scheme. That's a vicious circle. Have we got to the point now, in light of the government's completely complacent response to what's going on in the Middle East, and we'll come on to that, but have we got to the point where responsible politicians have to start signalling that we really are close to the edge here, that we could have some kind of spasm on bond markets that would lead to major turbulence across the UK economy and society?
Yeah, look, the bond markets ultimately matter probably more than any other group of people to our economy. We borrow a large amount of money. We have a very large debt. The servicing costs on that are about 100 billion a year, or twice what we're spending on defence. And what they look to is the economy being managed in a way that we are living within our means, and we're going to have a robust economy that can withstand external factors like surges in energy costs or whatever it may be. And it's it doesn't happen by accident, the fact that we've had very high gilt yields in our country compared to other countries, highest in the G7, higher borrowing costs even than Greece, for example.
But Morocco.
Morocco too, because of the view that the markets take. And that leads me back to the absence of a plan on the part of the Chancellor, you would have thought that yesterday in the House of Commons, she would have come to the House and said, look, we've got all this stuff happening in the Middle East. There are going to be potential risks around this. I have got a clear plan to show how we're going to get this economy moving and growing. And we didn't hear any of that. In fact, we heard the reverse. We heard complacency. We heard somebody that was basically saying, don't worry about it. It's all under control. Stability is key, and that's happening. And congratulate me for it. And we're all going to be feeling better off by the end of this Parliament. And that is just fantasy land. So we need that clear plan to get those gilt yields down, get our debt down, get the deficit down.
What do you think, Mel Stride, and serious people on bond markets will watch this interview, if I may say so. What do you think should come first? Tax cuts or a demonstration that the British government can get its arms around proper spending constraints?
They have to come together. So a lesson of the past has been you cannot go out with large-scale unfunded tax cuts and expect the markets to react well to that. You've got to demonstrate how they're going to be funded. And that's why at our conference we came forward with £47 billion of savings across the public spending, across public spending. And we had a golden rule, or we have a golden rule, which is at least half of those savings have to go to bringing down the deficit. That's a fiscal responsible thing to do. But then you can then use the rest, or up to half of it, to actually go out and bring taxes down in a responsible way. And that's exactly how a future government will operate. If you think about Margaret Thatcher and Nigel Lawson, they did things in a particular sequence. The big demon then was very high inflation, industrial unrest, and all of those kind of things. But they got inflation down, they got on top of the public finances, and then they rode in with the tax cut.
But they did the 1981 budget first, Geoffrey Howe's budget, and you had 365 economists saying it's mad, you can't cut spending like this, or you can't slow down. They did that. It was only later in the 80s that they did the Lawson tax cuts. So can you really afford to do the tax cuts and the spending controls together? Surely you should do the spending controls first, get them in the can, prove them.
Well, what you've got to do is you've got to demonstrate. Currently, the way of demonstrating that is by convincing the Office of Budget Responsibility that your plan of cuts and savings versus tax cuts, etc., all adds up to something that meets your fiscal targets. So that is the basic constraint on how you can operate. And the markets will take their confidence from, as things stand at the moment, the OBR saying, well, yeah, we'll sign that off. That seems to add up. So that's what you've got to achieve. And of course, this is happening through time. So the OBR numbers, as you know, with the fiscal targets are not an immediate binding target. It's a few years down the line. It's where the economy moves to through time that matters. But we have got to be very clear to the public, and I have been very clear, I've given numerous speeches on this, that our first primary duty as a future government will to make sure we live within our means, we can explain where tax cuts and other spending or whatever it may be, how that is going to be funded. We're not going to be simply leaning into more borrowing, as this government is doing, but we're going to be, in a very grown-up, adult way, explaining how we're going to fund things.
Tell me a bit about your spending constraints, Mel. You announced them a while ago.
Yeah.
It strikes me, because there's been so much else going on, they haven't really come under much scrutiny, media scrutiny and so on. Are there external bodies who have run the slide rule over your spending constraints? Just outline them and tell us why the public should believe them.
Okay, so I set these out at our autumn conference last year. So lots of economists and lots of people have had plenty of time to crawl over all of those numbers. And they break down roughly as follows. So you've got about 23 billion, which is welfare reform. So that's rowing back, particularly on sickness and disability benefits, access to our benefit system, making sure that's not there for foreign nationals, for example, and changing the way in which the benefit system works, so that it's much more exacting in terms of people being classified as having these conditions, subject to medical opinion rather than just almost self-certification. Okay, so big changes there. The size of the civil service, getting it back to where it was in 2016, when the
It's a third bigger than 2016.
37% bigger than 2016.
Crikey, it's growing all the time.
Yeah, exactly. Which means...
And you looked the numbers up a few months ago.
Yeah, it's over 500,000. It's 37% bigger than 2016, which means actually you need to reduce it by 25% because you're starting then with a larger number to get it back to where it was. The British, they're about right. If you do the maths, it's about that. Yeah, about 25%. So, the British state, Liam, didn't fall apart in 2016 because of the size of the civil service.
And since then we've got AI, we've got email. We're all meant to be more efficient.
Which, and we perhaps can come on to discuss that. You've got to then think about how you drive productivity through the public services, and AI and technology is certainly a part of that. You've got the foreign aid budget. So reducing that from 0.3 to 0.1% is a very easy calculation to make, and then access to social housing and various green issues and other things, and that's how you get to that figure. But they've all been set out. You can go on the internet, onto our website, have a look at it all, have a look at the breakdown and see.
So the headline figure is
47 billion.
And that 47 billion, just to be clear, is the savings that you think a Conservative government would make at the end, 47 billion per year by the end of a 5-year period.
Yes, in the year which is relevant to the fiscal target.
Which is 5 years hence.
Which, well, under this government, it's actually been coming forward a year each year. So it goes to 4 years and 3 years. But under us, we are saying, yes, that at the end of that period, we would be in a position to be delivering £47 billion of spending, of lower spending than would otherwise have been the case. And that then brings us on to the other part of the equation, which is then you have some scope for some tax cuts.
As a business figure, as a successful businessman, if I may say so, Mel, what's your impression of the civil service? What's your impression of the hire and fire policies in the civil service? What's your impression of the productivity of the civil service? And I don't wish to pick on, a very relatively small share of public sector workers, but it strikes me that the civil service is absolutely at the heart of what's gone wrong with the British state. It strikes me that you have far too many civil servants who think it's their job not to serve the government of the day. It's like their job to impose their views, to be almost as activists. Nigel Farage has talked about too many activists within the civil service. Do you think he's right?
I think there is an element to that. I also think that good ministers, just as good successful business people, can actually, to a degree, work with that and still make things happen, because a lot of it is about leadership, actually. Okay, so people can be obstructive.
We need a proper clear out, don't we?
Well, I'll come on to that. Yeah. But people can be obstructive in all sorts of organisations. But one of the reasons why I like to think that I have succeeded in the past, and others in my party have, is that they have shown leadership. And they've managed through those situations. So good ministers tend not to blame their civil servants as much as perhaps weaker ministers will. But you're right, there is an issue. And you mentioned performance and appraisals and so on, and where poor performance happens, you'd think that people would be moved out of the civil service and they'd lose their job. There's very little of that actually going on.
Do we need more of that?
Ultimately, yes.
So we need to sack more civil servants who aren't doing their job.
I made a speech at the Institute for Government some weeks ago in which I laid out exactly these points. And I said, if you look at the performance arrangements within the civil service at the moment, there are too many people who underperform, who are not being properly appraised. And indeed, when they underperform, are either being pushed within the same department into a different job when they may well underperform again, or they're going into another department where their previous work record is not considered at that point, because it's an open competition, including outside the civil service, when it comes to whether they get recruited or not. So you can even get examples of people that are underperforming, go to another department and are promoted at the same time. And you see that kind of stuff across the civil service. You also see it more broadly across the public sector. And we need to change that. There's no doubt about we need to change that. But there's something else I think we need to do. And it comes back to this leadership point. If you take the Department for Work and Pensions, it has 90,000 people working for it. It has a budget of about £250 billion a year. Okay. When you look at who ultimately runs it, it's the Secretary of State, supported by some ministers, perhaps a few political advisors that are political, and then the apparatus around the top of the civil service. If that organisation was in the private sector and you were thinking of maximising its effectiveness and productivity, you wouldn't select from about 350 politicians to see who's going to run it at the top, etc. You'd be going out globally to find the very best talent and paying it very well to come in and really move the dial and drive change. Now, absolutely right that we have a Secretary of State and ministers, absolutely.
And a perm sec.
Yeah, well, and all that kind of stuff, because that's part of the democratic part has to absolutely be there. There needs to be somebody around the cabinet table who knows what the government's seeking to do and sits at the top of those departments. But I think there's a lot of scope for having people in from outside. You mentioned business experience that I have and others in my party have, but people from outside who really understand business, who really understand transformation and tackling the kind of issues that you've raised, and paying them well and bringing them in and putting them in at the top of some of these departments so that you can really move the dial. Because if on an organisation that has a budget of £250 billion, you can improve performance a little bit, you make a big difference overall.
Does it worry you, Mel, just moving on, we are in the City of London here in the When the Facts Change studio. Does it worry you that the City of London's, the number of listings we've been doing over recent years, we're falling out of the top 20 countries in the world for listings, for new companies beginning their stock market life here in the City of London. AIM, the alternative investment market, which has been very important over recent years, allowing smaller companies to list and raise finances, is a shadow of what it formerly was. Does that worry you, and what are the Tories going to do about that?
So, yeah, the City of London's position does worry me. I mean, it's a huge part of our economy, not just in and of itself, but also in investing in and driving returns for savers and driving economic activity through investments in businesses. I think there are several things that need to be looked at. One is around the depth of the pools of capital that are here. If you look at pension funds, and you went back 20 odd years plus, quite a reasonably high proportion of the funds there were going into domestic investment opportunities. Including long-term patient capital, including scale-ups, the areas that have emerged as weaker investment areas within our economy. So there is definitely some work and thinking, I think, to be done around that. I'm not, for example, in favour, as I think Labour potentially are, of mandating these funds to invest in a particular way, because I think that's not in the interests of those.
That's expropriation of private capital, isn't it? It's into government.
It's a breach of the basic fiduciary
preferred
duty.
Government schemes. It's crazy.
And we mustn't get into any of that.
Yeah.
But equally, if you look at the tax treatment of investment in pension funds, etc., the taxpayer more generally is funding a lot of different reliefs. And I think, therefore, there is an argument that says, well, if you're going to have those kind of reliefs, then maybe the domestic taxpayer and our economy should expect something in return. So we are doing some thinking around that kind of stuff. You've got other things when you come to listings. Of course, we've got stamp duty at 0.5%. You don't have that in some of these other markets.
Stamp duty on shares, not
transaction-based tax.
Residential property.
Yes, I get that. Yes, exactly. Yeah. You've got the listing regulations, the kind of status of businesses in vis-a-vis their founding.
A lot of this stuff is make-work schemes, isn't it, for civil servants and dullards in the City of London rather than business people in the City of London.
But you've also got something else that is really important, which is our attitude towards risk. We have become a society and an economy in which regulators have attempted to iron out every single wrinkle of risk that there is in the system, and by so doing have layered up regulation upon regulation in a way that has stifled entrepreneurship, the creation of wealth, businesses, investment, and so on. Take the Financial Conduct Authority. It has 57,000 businesses that it regulates. Okay, and when something goes wrong, what actually happens is get hauled up by the Treasury Select Committee. Nicola Ruffey, the head of that organisation, gets given a public punishment beating live on TV as a consequence of what happened. And he goes back to the ranch, no doubt, and says, well, let's never do that again. And in fact, where are all the other unexploded grenades? I want you to regulate them out of existence.
Indeed.
We must have zero risk. Now, they have the
box tick.
You get all that, and it filters down. And at the heart of it is the consumer duty, which is to protect consumers, and that's a very worthy aim. But there has to be a balance between trying to protect everybody from everything on the one hand, and actually allowing these businesses to get out there and thrive and do what they do well. And that balance is fundamentally in the wrong place at the moment. So we're doing a lot of work at a party at the moment, looking at those kind of issues. You can see it in areas that are more systemic. systemic. For example, the PRA, which looks at
Prudential Regulatory Authority.
Yeah, exactly. The kind of regulator risks there are systemic risks within the financial system,
which there are,
and it has something like 25 to 30 different have regards to in terms of its primary objectives, including things like diversity and the climate change and all of that kind of stuff. That's not actually about growth. So we've got to get back fundamentally to saying, look, the world is full of risks. We've got to have a higher appetite for that. We've got to have less regulation. And the regulators, such as they are, have got to have that very clear remit to go for growth. That is the most important overriding principle.
Last couple of questions, Mel, if I may. How worried are you about what's going on in the Middle East? It strikes me this is a before and after moment. We've got an end of proxy conflicts in the Middle East now. We've got direct state-on-state battles within the region. Donald Trump says the big ones are yet to come. This is going to go on not for days or weeks, is it? It's going to go on for months. What could be the economic implications of this, and how should we respond?
So I am worried about it, obviously. I think in terms of its impact, it does depend on how long it goes on and the nature of what is going on. So the big problem points here are clearly the Straits of Hormuz and 20% of our oil coming through the Gulf, if that gets clogged up, or the insurance
and LNG
available, LNG, all of those kind of things. There's also the attacks on refineries and the productive capacity of Gulf states. There's also storage issues which relate to that as well. But if it's short, sharp, and it passes through, the implications will be not great, but not disastrous. If it goes on for a long period of time, we get elevated oil and gas prices through time for quite a while, it will have a very, very bad impact on our public finances. Now, if you look at the OBR's latest economic and fiscal outlook, there are assumptions in there about the price per therm for gas, for example. It's something around 85, 86, 87p, something like that. Well, the gas price at the moment, I think, is about 140p, So,
and the rest.
And the rest. And it'll be rising. It's probably changed since I read that.
We started this.
Yeah, it's probably gone up another 10%. So that is a huge pressure. Another inflationary shock for our economy would be extremely painful, because it would mean, firstly, people would instantly start feeling worse off. The Resolution Foundation says that come the summer, it's possible, if these prices are still elevated, that the average family will pay £500 more on their energy bills than would otherwise be the case.
A year.
So that's painful. A year.
That's big.
That's big. And also, you've got the fact that if you've got high inflation, then of course that means debt servicing costs go up through the linker point that you've made. It also means that the monetary response typically would be higher interest rates in order to bring that inflation down, which will cost people on their mortgages, cost businesses when they're assessing.
Whatever the Bank of England does.
Yep. So that will be really difficult. The other thing, of course, is the general impact on the global economy. We are a very open economy, and if the global economy starts to stall, then that will impact us as well. But I go back to the start of our conversation in this podcast, which is what are the state of the public finances and what should the government be doing? They've left us in a vulnerable position, such that if the worst end of the spectrum I described happens, I think it will be extraordinarily difficult for this economy, okay? Because we don't have the kind of firepower that we built up from 2010 when we started to sort out the deficit from the last Labour government, got us into a position where, for example, when COVID struck, we were able to step forward £400 billion of support so that the labour market didn't completely disintegrate, and we had mass unemployment even.
Well, the Bank of England created most of that, but you can't keep doing that, can you?
Yeah, but it ultimately ended up leaning into a higher debt, actually.
Yeah.
We are now maxed out, right? And this government has done nothing about it. If you look at the spending side, you look at the forecast from our last budget under the Conservative government, it was to spend, I think it was about 77 billion or something, okay? It's heading for 133 billion this year.
You mean the borrowing?
Yeah.
The annual borrowing?
The actual...
debt service.
Spending. No, not actually debt. Well, that's heading for about 140 billion. The point that I make is on all those metrics of deficit, servicing costs, debt, etc., whereas under us it would have been doing this, under this Labour government it's broadly doing that. And
so it's been flatlining, now it's going up. So we're maxed out. And how vulnerable does that make us?
but it makes us very vulnerable, because it means that if those pressures visit our shores and we don't have the fiscal capacity to really credibly handle that situation, what do you lean into? We're already on the tax side running into the highest tax burden in the history of our country. The OBR in their latest forecast report make the point that it's up at a level where its tax is becoming borderline unsustainable in our country. The Chancellor is beginning to run out of road. What she has to do is what we were saying earlier: get on top of public spending, get those, particularly welfare, get people off benefits and into work, get those savings in place, get some taxes down, start paying down the deficit, and get the economy moving.
Final question, Mel. The Conservative Party is a broad church. That's why you're arguably the most successful political party in the history of the Western world. You've been in power more since your party began than any other party, certainly in Europe. Because you are a broad church, you do have the one nation tradition on the sort of centre. You do have a more robust centre-right tradition, as well, a more free market position. It strikes me, Mel Stride, and I say this to you in all sincerity, that the Overton window of British politics is shifting rightward when it comes to net zero, when it comes to tolerance, not towards immigration per se, but towards mass immigration, when it comes to a desire for a smaller state living within our means, and so on. As the Overton window of British politics shifts right, while taking your party with you, shouldn't the Conservatives be shifting right?
So I'm not sure I would see everything in terms of left and right, but I would see things in terms of what is the common sense, sensible thing to be doing. And I think I've set out what I think that means in terms of the economy. I agree, however, that this Overton window shift has been very helpful in terms of what my party believes we should be doing. And one of the things that you didn't touch on, but you could have done, was welfare. I think the Overton window has shifted very substantially on that. I think, if you went back 5-10 years, it was much more difficult to start talking about taking tough decisions in the welfare space. It's much easier to do that now. And that is a big opportunity, because I think it means that the public, on many of the arguments that need to be won, are in the same place as the Conservative Party. The problem with Labour, of course, and Rachel Reeves herself, I think, probably knows this, is that they should be in the right place on these issues as well, but they can't act because they are hostages of their backbenchers. And you saw what happened when they tried to reform welfare, albeit relatively modestly.
Yeah, last summer. Last summer.
U-turn.
Yeah.
The 15 U-turns I think we're up to at the moment, Liam. So that is a weak government. And therein lies part of the problem. But look, let me tell you one thing. Kemi Badenoch will be no weak leader. She will be one of the strongest leaders we've had in many, many years if she gets the opportunity.
And on that note, Mel Stride, MP, what would you say to Conservative MPs? We all know they're there. We all know they're thinking about it, who are considering moving to reform. What's your cry to them as a senior member of your party's leadership?
We can win the next election is the first point. The second point is that on the economy, and I said this earlier in this conversation, fiscal responsibility is absolutely key. Why would you go to a party that in the last general election came forward with about £140 billion worth of unfunded spending and tax commitments, which would have been ruinous for our economy? Why would you go for a party that in its offer to the hospitality sector came up with an uncosted proposal, shot full of holes, which had a 10 billion black hole at the centre of it, and then went out and tried to misrepresent that policy in order to justify the fact that the black hole wasn't there, but it was all there in black and white. You don't want a party that's going to play fast and loose with the public finances. We know that you need to live within our means. We are setting out clear, credible plans as to how we will deliver that, and I believe that will cut through. In fact, if you look at the polls, everybody's obsessed with polls, okay? The only poll's going to matter, obviously, at the end of the day, is the general election in 3.5 years' time. But there's a consistent...
if not sooner.
There is a consistent area in which the Conservative Party has led every other party, and that is on the economy. Who do you trust to take the right decisions on the economy? And that is where we are making very significant progress, and we will continue to do so.
Mel Stride, thanks a lot for appearing on When the Facts Change.
I've enjoyed it. Thank you.
Thanks for joining When the Facts Change, economics and politics in a fast-moving world with me, Liam Halligan. Please subscribe to my YouTube channel and my podcast via Spotify or the podcast app. And above all, please subscribe to my When the Facts Change Substack.